Saved by the skin of our teeth. Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, I'm going to go over the just crazy whipsaw action that we did see on the Bitcoin chart today, as we tagged those levels that I did suggest were likely had we lost the daily momentum zone that I had established a couple days ago for us, along with its 2 to 5 day projection. Now, you do see that stocks did get quite a good bounce, and so overall, the trend has been fairly bullish for the last week or so. And we do have to just take a look to see if it's likely that this will continue or if this is all a fake out based upon propaganda and if this is going to be another fool's rally. Guys, first, let's go to Bitcoin, where you can see that just absolutely traumatic drop that we did have on the charts. If we go to the 1 hour, you can see, of course, that we did have just a sheer cliff fall off that could have tragically taken us even further down had not it been for some type of intervention by the Japanese government, guys. The Ministry of Finance actually came in and decided that they wanted to save crypto, and of course they don't actually care about crypto. They don't care about the U.S. stock market. What they were really trying to do is prevent the yen from falling off a cliff. Here we can see the yen versus the US dollar. And essentially, we do see this massive drop in the price of the yen over the last year. I mean, this thing looks like a poo coin with no bottom in sight. And that's as far as I can actually zoom out right now on the 1 hour, but you can just see how just hour after hour after hour for months on end, right, for the last year, the yen has just been catastrophically dropping like a thunderbolt from heaven, headed straight to hell. And so, what happened is that the Japanese government decided to step in and intervene and essentially dump their US dollars, dump some of their US bonds or whatever treasuries that they're holding, and buy back the yen so that they can have the chance to restore a little bit of dignity to the yen, which, of course, if these currencies do drop too far below the dollar, since everything's traded in the dollar, it does cause havoc in the international system. And by the way, guys, that's not good for the for Americans either. Okay, a strong dollar makes it very difficult for us to do business. We actually are really our best when we have some type of very predictable and stable price of the US dollar, which then other countries like China tend to peg their currency around, or have certain national policies around, because the US dollar is the world reserve currency. And so some of these smaller nations and some of these nations that are highly export dependent really are going to struggle depending on how they have to procure their raw materials, how their supply chains are oriented, just depending on how their economies are oriented towards the US dollar. It just can cause absolute pain. And so, guys, if you want to thank anyone for this boost on the Bitcoin chart today, where you did see, of course, us just dropping to hell and then suddenly flash wicking back up, to our previous levels, even taking out the little local daily high there. You guys can thank, of course, Japan for being super accommodating, right? And guys, if you felt that bounce in your portfolio, again, just give a shout out to Japan. So everybody, Round of applause for the Ministry of Finance there. Now, how long will this last? I don't know, but guys, it did take about $50 billion for this bounce to be produced on the chart. And of course, we can see it over here in the US dollar, where quite cleverly the Japanese Ministry of Finance, they did dump the US dollars right when it was about to create essentially a neckline with the rest of this price action that could have had the dollar just skyrocketing, right? As we see this kind of cup and handle, we could see this kind of bullish pattern start being put in. There's also this head and shoulders, and so if you guys think that this is a natural formation, something was totally weird about it. There's definitely a inverse head and shoulders here, which could easily have played out to the upside. Now, because of that, and actually was beginning to, but because of that Japanese intervention, of course, we do see this just dramatic pullback right to the trend line on the DXY. And guys, this is no joke. If we lose support here, if the US dollar isn't able to just kind of hang on, and you see this noble effort by dollar investors to try to get us above that trend, it could just also be a kind of liquidity grab here. But as we head down, um, you know, basically the market will lose faith that this formation is going to hold up, and it can easily continue to break down, maybe even to the previous lows. And of course, if we violate that, then we won't even have the chance for a double bottom. This will be a major pullback on the dollar. And so the coming week is going to be super critical for the dollar in terms of it showing its strength. Now, do I give up on this formation? Of course not. Why not? Because we do have these fractals where essentially we had the same type of pattern being put in over here. We had this kind of a cup, kind of a handle. We started to fire off, and then of course we just got this pullback. And look, this pullback went below the bottom over here. It basically double bottomed with this one. And then what happened is the dollar just continued to go. So am I giving up on the dollar yet? Not really. I do think that we don't have any confirmation in this market in terms of the ability for stocks and crypto to just run, because the threat of the dollar is still there. And so even if the dollar is double bottoming with this previous price action right here, again, don't count it out to just suddenly come back up. And that $50 billion that Japan spent to make the dollar just have this tiny little dip, right, could have been, utterly wasted, to be honest. Guys, if we do zoom out on the dollar chart, you can see just how little of an effect that the Ministry of Japan there had on the Ministry of Finance in Japan had on the dollar price. It essentially just brought it down just a dip, right? $50 billion they spent to just get a tiny little dip that just took out basically the price action that we were looking at 2 days ago. And so we're exactly at the same price that we were at 3 days ago. And that's the net effect of the full force of the Japanese government. Now, guys, they have tried this before with $20 billion, and so combined, the Japanese government has spent approximately $70 billion trying to shore up the Japanese yen, just because of how destructive these dollar prices are on the Japanese economy, where it's just very expensive for them to live right now. Of course, inflation is going crazy all over the world, and just the supply chains are being just destroyed by all of the chaos. as all of these countries that did provide basically unlimited stimulus to their populations, just unlimited, 0% loans and all of that during COVID. Of course, they are having to pay the piper, just like the U.S. government. And so, every country is dealing with it in a slightly different way, but it is just incredibly destructive. And you guys can see that the yen price here has basically the yen over USD chart here has basically doubled from 80 to effectively 150. And this is just it looks really bleak, guys. Unless the Fed makes some type of a pivot, it looks pretty bleak, okay, for a lot of these markets. Something is going to break, and that's having a lot of speculators come out and saying, look, we're starting to have reverse currency wars with Japan, and the UK and some of these other countries. China's probably going to get into it, and so we do have these guys coming out and saying, like, Evans over at the Fed, that the Fed is facing a difficult messaging problem as it nears a decision to halt the pace of rate increases. And so this has led many people to speculate that the Fed is going to pivot. And then, of course, we have, Daly at the Fed, and he's saying it's important that we slow our rate hikes, right? And so people are using these statements by Federal Reserve members to suggest that the Fed is going to switch its policy around. But guys, why do I have red X's through these statements that everyone's saying the Fed is going to pivot? The Fed is going to pivot because these guys don't matter. They are not voting members on the FOMC board, right? They do not set the interest rate policy. These guys' opinions, everyone who's quoting these guys as the potential pivot in the Federal Reserve, the U.S. Federal Reserve's policy, which is driving the dollar to be so strong, they have no idea what they're talking about. These are just speculators just trying to guess at what might happen based upon Fed members who, frankly, are a little bit too close to investors. They're a little bit too close to corporations that can benefit from these type of policies. And so, you guys can get just wrecked following these type of rumors. Better to just listen to what Jerome Powell and some of these guys who actually vote on the board are saying. And we can just go over it. What did Jerome Powell say at the last rate increase? He's saying restoring price stability will likely require maintaining a restrictive policy stance for some time, guys. Okay, do you think for some time means just 1 month? This was the last time that they raised it. Do you think they just meant one time when he's saying for some time? He means for a long time. The historical record cautions strongly against premature loosening policy. He's saying, guys, that we're not going to ease up. We're going to continue to go hard, as shown in the September or the SEP, the median projection for the appropriate level of the federal funds rate is 4.4% at the end of this year. So he's telling us what rates need to get at by the end of the year. And if we look at our current rates, our current range is only 300 to 325, and Jerome Powell is saying it needs to get to 4.4% by the end of this year, 1 percentage point higher than projected in June. And so, guys, if the rate is currently 300 and he's saying that it needs to get to 4.4, then that suggests that there's 140 basis points, at a minimum 125 basis points between the two, right? And so if we take a look at what is 125 basis points, right, divided by 2, that's going to be approximately 62.5 for the next two Fed meetings that have to occur before the end of the year. And so that would suggest that one of the increases is going to be 75 basis points at a minimum, right? And that's likely to be this next one. And then perhaps in December, right? So the November is likely to be 75. And then perhaps in December, we're likely to see a 50 basis points, just as the Fed takes a little bit of a slowdown in order to measure what their work is doing. And he says the median projection rises to 4.6% at the end of next year, right? That suggests that they aren't going to pull back. They are going to continue to increase in the next year and hold that rate for the entire year, which will suppress the market for the entire year, guys. It's going to just basically keep things where they are after the next 2 to 3 increases, okay? And then declines to 2.9% by the end of 2025. So what you can suggest there is that sometime at between the end of 2024 to perhaps mid 2025, the Fed is going to make their pivot. They are not going to make their pivot right now. Anyone talking about a Fed pivot right now, they really don't know what they're talking about. They're not listening to Jerome Powell, and Jerome Powell is telling us one thing, right? And guys, he is not going to give up on this. We are going to continue to see interest rates rise. The Fed is not going to pivot. Pivot, of course, means going backwards. Pivot means going in the other direction. Pivoting around means turning around. They are not going to turn around, guys. At best, you could see a slowdown in the increase of rates, but they are going to continue to drive rates higher, and that means that these trends that we're seeing in the market are going to continue. And so, guys, basically, he's saying we are taking forceful and rapid steps, which doesn't suggest that he's going to slow down to me. It doesn't suggest he's going to go easy to me, so that demand comes into better alignment with supply. Our overarching focus is to use our tools to bring inflation back down to our 2% goal. And are we anywhere near a 2% goal? Well, let's take a look at some of these different, uh, you know, uh, rates that we have going on in the market, and you'll see that we are way out of alignment with these targeted goals. And so, guys, when you're seeing different bonds, having prices that are just way out there, then it's highly unlikely that the Fed is going to suddenly pivot when their goal is 2%, maybe some type of compromise at 2.5%, but then you see current interest rates just way over where they need to be. And if you see inflation at, what, like 8%? What is this? United States inflation rate, right? Like 8% right now. Okay, guys. So does that suggest that we're done yet? Right? Does that suggest that we're done yet? What did Jerome Powell just say? Right? Jerome Powell just said that he's going to have a target rate of 2%. 2%. And let's see. The median projection da 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 and bring inflation back down to our 2% goal. And what we just saw, of course, was that inflation is 8% right now. So these guys are not anywhere done, and in fact there's a high risk that they could even go harder than what you think. And so just to be aware, guys, that these kind of rumors about a pivot, I mean, maybe we could see a slight slowdown, maybe for political reasons. Maybe we could get a kind of fool's rally bounce. But do you really think this is over, right? Reducing inflation is likely to require a sustained period of below trend growth, aka a recession, and there will be very likely be some softening of the labor market conditions, aka layoffs, massive layoffs, right? Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. So, what he's saying is he has his eye on the next 20 years. He doesn't have his eye on the next 2 years. He doesn't care what's going to happen to the market in the next 2 years, okay? You know who does care about those market prices in the next 2 years? These guys politicking, trying to say that the Fed is going to pivot before it's actually ready to pivot. Okay, and so what does Powell conclude with? We will keep at it until we are confident the job is done. I just showed you inflation is 8%. His target is 2%. Is the job done, guys? Right? Is the job done? Or what do you think is in the head of Jerome Powell right now? Right? Yeah, that's correct. He's going to finish the job, and a lot of people are going to be FOMOing into a bounce, and then they are going to be bag holders as the Fed continues its harsh policy, right? And so, guys, just because these fools rallies, may have you like coming in and out of the market, don't get trapped in any position. Make sure that you're selling and that you're taking your profit, because I guarantee you, Jerome Powell and these voting members are not looking after you for the next year to 2 years, most likely. They are going to be looking after the interest of the United States monetary system, and they are not going to be thinking about Japan. They are not going to be thinking about the UK. They are not going to be thinking about our trading partners. They're only going to measure how deep a recession goes if something breaks, and something has not broken yet, and so they are not going to pivot. Guys, let's go ahead and move on to the rest of the show here, where we can see, of course, that we do have several things, going on in the chart, which is basically of interest at the moment. And I can go ahead and put our second boss on here. Let's jump down to the 4 hour in order to get a little bit more detail. You can see that yesterday's momentum pool, or the day before yesterday's momentum pool, we did hang on to the top of it. I showed you the bottom, that if we lost the bottom of that momentum pool, what would happen? That we would likely just collapse. We did lose the bottom of that momentum pool right there, right? And what happened, guys, in losing the bottom of that momentum pool? Woo, bop, right? We went all the way down, and in fact, even went down further than many people would have suspected or have liked. And of course, that did go along with what I was suggesting in my video. So just truth in advertising. Let's go ahead and see if we can get some audio on this. I know last time we had a little bit of trouble. Everything's good in the hood. The daily momentum pool here is serving us quite well. And, if we fall back into this pool, just kind of range around a bit, no problem. Doesn't matter at all. The thing that we don't want to see is closing underneath the momentum pool. That would suggest that our momentum trajectory would be to the downside. And so, of course, above or in the pool, no problem. We're just at the resort, just chilling out. Our 2 to 5 day projection is incredibly tall this time. Previously, it was just very slender up here at 19,500. In fact, for the last couple days, it's just been like a straight line up at 19,550. But something weird is happening. So now our momentum for the 2 to 5 day projection gets all the way below us and then all the way above us up here. Now, I would say that on average, that puts pressure on us to the downside, but we also have a little bit of support, a little bit of wind at our back. So we have these headwinds, and we have a little bit of support at our back also as we try to push forward. And so, really, it is an open question whether or not we are going to break through this area. Which again, guys, just to not to put too fine of a point on it, but we really need to get above 19,550 as soon as possible, guys. If you want to be bullish, okay, just gonna pause it there. Just wanted to have a little bit of transparency, of course, because I also suggested that we didn't see it in that video, but I didn't want to play it for too long. We also had I also had suggested that if we lost support, most likely that we were going to then explore the bottom of this mid channel that we have here, or this other side of the channel that we have here from our macro downtrend of the last 6 months or so, where we have just been, rejected, 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 right? Rejected, rejected, and guys, we are being rejected even again, and we were heavily rejected and just thrashed down below this line before, of course, the Japanese government stepped in and gave us a little bit of a bounce there. And so, guys, again, please do thank the Japanese government for that bounce and catching us if you were long in this position here, because, of course, this could have gotten very ugly very fast. This could have been a capitulation moment for Bitcoin as our volatility has been building up, where if we do check out volatility, you can see that on the daily, right, on the daily, we are at extremes and we are still just screaming, okay? We haven't really turned up or done anything. We are just screaming for some type of action to take place. On the 2-day, we are screaming even louder, right? As we go to the 4-day, you see we are about to reach some of those screaming levels. The 5-day is turning down, and then by the time we get to the weekly, it's a bit confusing, a bit of a muddier picture, but you can see at least for those, shorter time periods and kind of less than a week periods, we do understand that there's a good likelihood, that a big move is coming up. And so, guys, don't dismiss this volatility. As we get wedged into this downtrend, we are going to have to pop up or pop down. And if we lose our lows here, that would be quite dangerous for the market, especially if we consider that we do have the potential to be putting in some type of, a Wyckoff like, a schematic, where essentially if we do have redistribution, we're going to be looking for signs of weakness, right? We're going to be looking for taking out our lows. If we take out our lows, guys, you better get out of your long positions, because there is a very good chance that we go much further down. On the other hand, if we keep making like little higher highs and we have a breakout of this downtrend, right, and we're making higher highs, then you better be prepared to switch gears and to put your bull hat on, because something interesting could very well happen in this market where we have an accumulation, a schematic kind of being built up. Now, this isn't perfect, and of course you can see that just based on our price action, we are going almost in a straight line sideways, which of course accounts for us having such low volatility. You see, this is a volatility measure: super high volatility, super low volatility, right? What does a super low volatility do? It pops up into high volatility, right? That's why this can be the explosive move. And what does high volatility do? Well, it contracts down into low volatility. So that's why this can be kind of a consolidation period, right? Now, of course, you can get some pretty volatile moves off of, consolidation, depending on what your macro direction is. But guys, like overall, we are looking for kind of a chaotic move next. We are not looking for, just more consolidation. We've consolidated to our max. Okay, now it's time to start building up volatility again. And while you can consolidate sideways for a very long time, you can have low volatility for a very long time. Eventually, the market needs to inject randomness, because you can't have a trading market where you just have one price. It doesn't make sense. That's not how trading markets work. Eventually, eventually either the buyers or the sellers will get exhausted. And so, it's not like people just come in and pay fees, right? Just to constantly trade the same price. It doesn't make sense. You're not going to continuously pay fees for that, right? You would just be continuously losing money on both sides. The price action has to go somewhere. One side has to get exhausted, and volatility has to re-enter the markets, just like this kind of crazy spike right here, right? You can see something like that potentially, right? We have no idea, but that's why it's called volatility. It's volatile. We don't know how it's going to go, right? It's direction neutral. And so we try to get a bias on that by looking at our structure, seeing, do we have any type of head and shoulders? Do we have any type of patterns that may suggest that we're going to go one way or another? And while we do have a little bit of this kind of like a head and shoulders type thing going on, which might suggest to the downside, or we do have like this kind of a bigger kind of head and shoulders, which would suggest maybe playing out on a longer scale to the downside. There's nothing super definitive here, and more or less we just have a range. And if we just look at our local price range, we could easily just pop up here and then even break out like this, and that would be a measured move off of this range. Or we could break down and then break down here again, like another measured move of our range, and that would be just a very conservative play. But other than that, what's our price action really doing? We're just playing ping pong in this area. And as we enter into this wedge, of course, people are going to get excited if we break to the upside. They may want to retest the lows just one last time before just skyrocketing. Or if we end up breaking down, this is going to be that Wyckoffean sign of weakness that perhaps distribution has set in, and all of these buyers who had been buying up here, they're just going to dump because they didn't buy to get a lower price. They bought because they thought the price was going to go up. And so if we have signs of weakness, all of these buyers who have been buying for just months and months and months, they are going to suddenly unload all of their Bitcoin. And people can say, oh, but the only people who are going to be willing to sell their Bitcoin are the ones, I mean, like everyone who's willing to sell, they've already sold. Okay, fine, but again, you have some signs of weakness, whether it's because the dollar gets super strong again or something happens in the market that just spooks the market, then you actually have all of these buyers ready to sell. It doesn't matter if the guys at the top up here already sold. It doesn't matter if your previous cycle guys are hodling or if they're going to sell or not going to sell. All you have to be concerned about are these guys, and did you break the lows, and then they will sell if you break their lows significantly enough. So guys, that's just a little bit of the price action. We saw volatility. Let's go ahead and just double check our EMAs. Almost guaranteed that it hasn't changed. But if we do just throw this stuff on, let's take off the drawings, then we can see on the daily that we still are not in a daily squeeze play on Bitcoin. Okay, guys, like again, we have to be in this area around 19,250 to be in a squeeze play. If you want to have some type of assurance that we're moving up, then probably 19,400, right, is your assurance that we're basically squeezing up, just like when we were over the yellow line over here, and then we got a nice pop. If we could get into that area, probably we're going to get a nice pop. Otherwise, it's just an open question. Of course, we are against our local resistance, and so it's more likely that, not being in a squeeze play right now, that we are more likely to drop down, just like we did right here, than we are to squeeze up. So just statistically speaking, based upon these EMAs, it doesn't look good. If we go and look at our 4-hour, the 4-hour actually looks pretty okay. And so you do see that we did have a squeeze play right here. We did get squeezed up by that nice, Japanese bounce that we got. And, of course, getting into that squeeze play, we haven't lost it yet. But what I would just note is that because that was an artificial bounce, right? this doesn't look like the strongest squeeze, okay? That was just a Forex artificial government intervention, okay? The markets got a little excited there, right? They love their Japanese bounces, but guys, you can see this price action is still a little bit angled down here, where you have this yellow line a little bit to the downside, and this red line, it is focused up, and so we do have a chance. But we really have to see how this plays out, okay? So this is just borderline right now. We do want to see a little bit more movement. We are losing the 4 EMA. I don't know if you can see that. Let me just, gosh, dang it. Let me just see if I can zoom in here. Oh, yeah, you can see it right there. We are losing the 4 EMA. And so this thing could easily squeeze back down between the 4 and the 9. This could get into a squeeze to the downside just as easily as it can squeeze to the upside between the 9 and the 21. So we have this weird moment where you see this a very short EMA is in between the short EMA and the long EMA. And so this very short EMA is actually a curveball. I can't make a call based on that, even for the 4 hour. And so the 4 hour is an open question. You can see like the price is just battling itself, whether it's going to be above that line or whether it's going to be below that line. And it can't seem to decide right now. This is a war going on. And guys, on the daily, of course, well under the 4 EMA, just not good. And so, of course, if we go to the weekly, just very ugly, very easily can just continue to go to the downside as long as we're under this 4 EMA. You can see what kind of catastrophic price action can happen underneath the 4 EMA when you have those daily closures there. So what are we looking for? We're looking for a weekly closure above 19,500-ish. That 19,550, guys, it just keeps coming back up. And then what are we looking for on the daily? Just based upon EMAs, we're looking at we need something to close above 19,200. Let's just say 60, right? Let's just say 275 actually. 19,275, 19,275, and I'm going to be much more confident. And then for the daily, and then for the 4 hour, really we need to just hold above. Well, just because of how twisted these EMAs are right here, I need to see the 9 get above the 4 so that we're kind of straightened out there. And so probably we're just looking at holding around this 21 right here where it was curved up. And so I will want to see price action around 19,175 just for the shorter term. If you are watching this video after I publish it, that's pretty much what I'd be looking for from an EMA's basis. Guys, let's go ahead and go back to the momentum pools, because of course we do need to update our momentum. And so let's go ahead and just take off these good old EMAs. And let's see, got my things just kind of messed up here. There we go. Okay, so we've already got the momentum pools on, and let's see, they're up here for some reason. But yeah, I mean that nice bounce by the Japanese government really did get us back into our 2 to 5 day momentum pool projection when we had very clearly lost it. And guys, so the Japanese saved our butts, and we were able to live for another day when in fact by all regards we should have effectively lost it. And you do see something very interesting here, which is as this new day is opening up and we do have this new momentum pool, while these ones have played out, right? These ones no longer serve any function. The new momentum pool is suggesting that we are below it, okay? Like we are not doing what we need to do in order to capture our momentum. And also the 2 to 5 day projection is also saying we're not doing what we need to do. Okay, so I'm on the 4 hour right now, so you can see that we still have a few more candles to put in before this day closes, and we could easily get into that area where we're just swimming around in the momentum pool to have positive momentum to the upside. But currently we're drowned. Okay, so whatever the Japanese were doing with their little push there, it didn't really save us for the long run. It only saved us for a day. And guys, like we really need to get into this momentum pool area, which just to yeah, it's 19,175. So that does go along the top of that pool for the daily. That does go along with the 4 hour EMA analysis that we were doing. If we can get our EMAs straightened out on the 4 hour, and if we can get above 19,175, then we're going to be looking pretty good for the next day in terms of our momentum. And then we have all of this area to play with, right? And of course, the critical line that we need to get above, I've been mentioning for several episodes, is 19,550. And guys, it's just been day after day after day after day of 19,550 being held as a line that we need to eventually get above. And so the chart isn't lying to us. The chart is not lying. It is telling us, right? Our momentum is telling us if we don't get above 19,550, we are going to sink down. So guys, we definitely need to get in that area. And taking a look at these different momentum projections that I have out here, we can see, of course, that we do have some momentum that we can preserve on the downside. So we may not have a catastrophic fall to like 14K or 12K right away, but we could end up cascading just the same. And there is a big momentum gap right here if we do end up violating 18,900. We can also see that a lot of our momentum ends just under where we are here on this a different type of momentum, and then similarly up here. And so really that 18,900 and that $19,000 level, they are pretty significant for the different types of momentum that we're looking at. And then even to have a chance to be bullish, I mean, really we're looking at these levels up here above 19,550. So let me go ahead and put on, the main event, those signals. Of course, I was saying in the previous episode that because these are our previous signals, guys, so these have to be updated, and I'll update them just briefly. But I was saying that under 19,181, we'd have a bearish orientation, on bearish bias, and as soon as we broke that level, bam, like guys, like nailed it. We just went all the way to the bottom, right, of this range effectively until we got the Japanese bailout. Don't worry, I'm done with the GIF. But you can see that in bouncing back up, we still haven't recovered that bearish bias. And while this bearish bias has moved down to somewhat because this drop down in price action has reset some of it, right? And so we can basically we can claim some type of a bearish bias right at the bottom of this momentum box here. I am going to give us some bullish possibility at the top of our daily box here. Let me turn off this second boss. But I would just say watch out, right? Because it's not confirmed because we're not above that 19,550, which we still hold here. And then let me go ahead and double check our weekly EMAs. So still 19,900 is a level that we really need to get above in order to be much more bullish. And to be honest, we're not even going to capture our 4 weekly unless we get above 19,300. So conceivably, we could move this bullish, but watch out, all the way up to 19,300. just understand that our momentum box is actually right down here at around 19,175. So for the day, as long as we're above 19,175, we're probably okay. But for the longer run, I'm not really bullish unless we're above this kind of, like at least 1/3 above this momentum pool here for the 2 to 5 day projection. I am going to keep this here just to give a proper signal. But just watch out, okay, guys? I really don't see a bullish bias until we're above 19,550 in any really sincere way, in any structural way, right? And then let's see if we can fine tune this with some of our momentum there. Let's see, we are going to hold on to some momentum, at least here. So if we're above 19,120, then I'm going to give us the benefit of the doubt. So we can probably dip a little bit lower, and still I'm not going to be super bearish, but I really would not want us to get below 120 there. Yeah, that's being confirmed with other types of momentum. So I don't know, maybe I can move this up a bit to 19,125. Then let's look at this momentum. Ooh. Yeah, we do have a significant danger of losing 19,158. What's the bottom of this box? 19,166. But in fact, yeah, the risk here is actually too strong because of how wedged we are in against our resistance. I am going to have to erase this, sorry about that. But we are doing live analysis right now. So 19,159 is where I have a bearish bias. Yeah, that's okay. And you know what? I'm just getting too many signals that we really need to in a very short term, we need to capture 19,258. Yep. That's fine. Yeah, that makes sense here. Ooh, that also goes with a weekly. Yeah, so I am going to move that up just slightly to accommodate this price. Again, guys, this is live momentum analysis, so bear with me here. Hmm. Yeah, I think that we could even consider to bring Uber bullishness down a bit, because I think we could front run this. We could front run that on the weekly. It's interesting. The 5-day is down here. That's a lot of room to move. That's very interesting. Yeah, if we are able to capture this bullish zone right there, I think we could front run an uber bullish perspective just at 19,781. Okay, guys, there we go. I mean, I put a little bit extra thought into this one just because of how, just how close we are to being wedged in by that second boss, right? And so if we break out of this, these levels are actually very significant for if we have a breakout. These bullish levels are very significant for that. And then these bearish levels are very significant for if we, just do a little bit of a fake out or maybe just break down, then these levels are super important to be considering. So that's why I'm just putting a lot of thought into it right now. Let me turn off those ones. And here we go. Okay, so these are your key levels to watch for Bitcoin over the next couple days. Of course, we have our momentum pools. And for the daily, you can see the coordinates I have for that. Over 19,176, probably doing a good job. Underneath 19,166, just watch out. For the next 2 to 5 days, we really would like to be inside of this pool or on top of it, and that's going to be a minimum above 19,166, and we need to get above 19,550 as soon as possible, guys, just to have some continuation to the upside. Otherwise, we're just going to be stuck in this channel going up and down, right? And guys, if we want to be uber bullish above 19,781, I think we can front run those type of weekly moves there. If we want to just to be bullish and like solidly bullish, 19,550, we can get bullishness in our attitude, right? If we have a breakout and we can get some bullishness in our attitude above 19,264, just to watch out because that will still technically be in kind of a fake out zone, okay? So just be careful. The market may be a little bit weird in between this bearish bias and bullish bias. It just could be unpredictable, but overall the bias will be bullish as long as we're above 19,264, and then bearish bias underneath 19,171, and we may be losing some type of a critical support underneath 18,977, which is going to be a front run underneath our key levels. It would suggest a further continuation to the downside, but of course we do have a little bit of support there. So it doesn't mean that we're going to just collapse underneath that price, just like we didn't absolutely collapse underneath it over here. It just means that likely we're going to be trapped to the downside, and we're not going to be breaking out anytime soon. Okay. So, guys, I mean, we could develop some type of bullish divergence. It's just the bias is extremely to the downside. And of course, we took a look at those Wyckoff charts in order to analyze that. It will start indicating signs of weakness, and that will likely have a lot of these buyers starting to sell off, okay, just to front run the move. But yeah, there's your key levels to watch. That was your alpha for the day. Stay safe and happy trading.